wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? Mplusware, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz. Wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? Mplusware, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz. Have you ever wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? Mplusware, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
Hello, good evening, everyone. Hi, good evening, everyone. All right. Okay. This is Elki here today, and today I'm not alone. Guess what? I have my colleague here with me. Okay, my colleague May is with me today. Okay, good evening, everyone. Thank you for joining our section for today. Okay, so our topic for today is finding your goal from the QR, which is quarterly results. Okay, we know that May is a heavy result month for Bursa Malaysia markets. So, what are the companies to look at in the month of May? So, in this section, we will be share with you what are our views and also what are the things that we think you should pay some attention on. Okay, so good evening, everyone. Thank you for joining our session for today. Okay, this is Elki here today, and together with me, that's my I have my colleague May with me today. Okay, so before I start the session, can I do a really fast sound check? Can you guys hear me? All right. If you can, then please let me know on the comment and we shall start from here. Okay. Hi. Okay. Is my sound good for you guys? Is the voice all okay? Okay. So if the voice is okay, please let me know. Okay. At the comments. Okay. Meanwhile, for the ideas and all the contents we share with you today are solely our opinions. Okay, opinions of the speaker. Okay, so all the information right here, the content that we share with you guys today are are general information and are for your reference only. Okay, all of the comments or the counters mentioned today shouldn't be taken as an investment advice. They are purely our opinions and a sharing for education purposes only. Yeah. Okay. So before I start my section today, let me share with you guys who are the speaker today. Okay. So beside me, my name is Alki. Okay. Together with me is May, my colleague. Okay. May she herself is before she joined M Plus, okay, she was a associate professional credit control uh with a well-known investment bank in Malaysia. Okay, so in 2020 she started to join M Plus, and then she has been focusing on the how to um do provides insights and also looking for agents for her clients. Okay, so with this intention, she able to train herself to become a forward thinker and come up with a lot of innovative trading strategies. So that's why we are here today with May, which is specialized in swing and also positioning positioning in her trading, and share with us what's her view about this bond market and what are the opportunities lying for today. Okay, and for me as of myself, for I believe many of you guys are pretty familiar with me. Okay, I started as a futures dealer and then joined as a PDP prop traders. My specialization has been at the technical analysis and also exploring on trading strategies to share with my clients. And I have joined stock dealer with M Plus Online since 7 years ago. Okay, so since then I have been sharing the knowledge that I have learned as a trader, and hopefully to help my clients and also the fellow audience to be profitable in this market. Okay, so today we will be sharing with you guys some of the we will start with KLI outlook. Okay, KLCI outlook, and then go into some of the potential sectors that we can look at and its catalysts and challenges. Okay, and from there we hope that we're able to provide you an insight and also a clearer view of what is happening in the current market, current environment, and hence do a better decision for this one. Okay. Yep. So if you have any questions, you can always feel free to put into the comment box, and we will try to answer to you as soon as possible. Yeah. Okay. All right. Okay. So let's start with the KLCI outlook. Okay. I believe for those who have been trading today, okay, we can see that today in the second section we are seeing selling pressure coming in, and and we are seeing further selling down on our local benchmark index today. Okay, if we look at the chart of the FBM KLCI, we can see from here that after we have strongly resisted at 1615 area, which we can see there are 4 resistance happening right over here. Recently we had a very sharp selling down all the way back to our support of 1545 area. Okay, so we can see that the for the past 2 days rebound, it has been a very minor one, and it was actually a rebound happening this amid a weaker environment in the global indexes. Okay, so although we are seeing the FBM KLCI have been rebounding for the past 2 days, but we can still feel that the sentiment in our KLCI market remains weak, with more losers than the gainers. Okay, so hence today we are seeing further selling down happening today. Okay, and again break below the 1545 support area on our FBM KLCI. So the outlook for FBM KLCI right now is pretty much bearish, with all this intense selling happening, and today is another Marubozu selling down candle, and we have pretty much lower area to 1520 area or even 1500s. Okay, so unfortunately the outlook for the FBM KLCI is much weaker right now. Okay, and this is pretty much normal, because if we look into some of the seasonal trends happening on our local index and also the global index, actually from May onwards all the way to end of October, they are pretty much bearish in many years based on the historical data. Okay, so if we look at, if you come, you might come through some of the articles that been mentioning that the seasonal trends has been dragging the markets. Sell in May, go away. All this proverbs, and yeah, we are entering the month of May, and also we are seeing the rising rates. Fast just raise the rates. Okay, Fast just raised the rates 50 basis point, and yesterday we just saw our local Bank Negara Malaysia has raised 25 basis point earlier than what many economists anticipated. Okay, so what happening right now is we are seeing all this thing happening, and the tightening of the money easing, all this, and that actually also contributed to the seasonal trends that we are seeing right now. Okay, so is it that in May it is really have to sell in May and then we have to go away and not touching the market? Is there any possible that any opportunities that we can see during this time? Okay, are there any opportunities? So today, okay, my colleague May and I will work together and share with you guys what are some of the opportunities that we can look into. Okay, that we can look into and share with you during this time. Okay, so right now I will pass the floor to May and share and get her to share with us what are the sectors and counters that we can look into, and also share with us the catalysts and challenges of all this sector. Yeah, May.
Thanks, Elkie. So good evening, everyone. This is May here. So today, we will cover some of the potential market sectors inside. So first of all, let's look at the consumer sectors. Okay, so for consumer sectors, the catalyst includes the recovery in disposable incomes, the borders reopenings, and the improving consumer confidence levels. So later I will talk more into the details. So according to our Ministry of Finance, right, the private consumption is anticipated to grow by 7.3% in 2022 compared with 4.1% in 2021, supported by improvement in employment opportunities, pent-up demands and revenge spending after consumer emerged from a long-drawn lockdown for the past 2 years, So you can see the employment rate decreased from 4.8% to 4.3% in 2021, and then it continued to drop to 4.2% and 4.1% in January and February of 2022 respectively. So even though the employment rate remains at 4.1% in the month of March, but actually the number of employed persons rises to the record high. So the economists are optimistic on labeled market recovery. And, and for the final rounds of EPF withdrawals of up to 10,000 per person able to cushion the impact of the rising cost of living. So based on the Bank Negara projections, the 20 billions in EPF withdrawal could contribute to 0.5% of the economic growth and stimulate spending growth by 0.8%. So the retail group Malaysia also projected our retail sales to grow at 6.3% in 2022 compared to negative growth in 2020 and 2021. Hence, the recovery in disposable incomes able to spur our consumer spending. So the third point is the country's borders reopened for international travelers on 1st of April. Expect to drive our tourist arrival and spending to stimulate the tourism sectors. We can see there is a 52% increase in international traffic in March compared to February, with 420,000 passengers movement recorded, and we believe there will be more to come. And adding that, our health minister Khairi Jamaluddin also announced on the nightclub reopens on 15th of May. So from all of these recovery catalysts, it is improving our consumer confidence level as the country transitions into an endemic phase. However, we must not forget the challenges faced by the consumer sectors, like the labor constraints, the exacerbating global supply disruption from Russia and Ukraine conflicts, rising cost of living from continuing increase in commodity price, and so forth. So these are some of the exposure of our consumer companies. From the rising of commodity price, we can see that the rising of essential commodity price impact our F&B companies greatly, which might compress their profit margins. For example, you can see for those Nestle, Kawan Food, F&N, Power Roots, as most of the commodity price increase throughout the years. So we would like to avoid consumer companies, and we would also like to avoid beside discounter, and as well for the counters under government pricing control mechanism, because they might have difficulty to pass the cost to consumers. So in conclusions, we can look into the retail players and rural companies as they are able to pass on the consumers to the rising raw materials and transportation costs through higher product price. So, Elke, do you have any comments on the consumer product index?
All right. I think I totally agree with you what you are saying. Okay. With this kind of market happening, we can see that the local index has been going on a little bit more going on the bearish notes. Hence, consumer is one of the sector that many would want to look into, because consumer staples always has been a so-called a defensive sector that the hot money might look into during weaker market conditions. Okay, but what we are also experiencing are the what we are also experiencing are the rising of the commodity prices. Like what Mason was sharing is we really have to look into some of these companies that they might be affected by this pricing control mechanism. Okay, especially like the sugar and eggs that they unable to pass the cost to the consumer. Okay, hence they will experience a certain degree of margin compression. Okay, but of course there are a lot other consumer products that we can see the potentials are there, and one of the very reason one that we can see is the nightclub are just gonna reopen on coming Sunday. Okay, and when we talk about nightclubs, the very first that we can think of on the Carlsberg, Heineken, and we just got Heineken result announced on I think yesterday night, right? Yeah, Heineken result were announced yesterday night, and we can see Heineken and Carlsberg both are on the top gainers today. Okay, so I think there are, like what May say, there are a lot of potentials in this consumer product sector, but we have to be selective. Okay, we need to do enough homework to see which are the better counters to pick on. Okay, and that for you guys who are here today, you guys are lucky because May have done all the homework for you guys. All right. Okay, so if you think that any of your friends that you would like them to enjoy these benefits and also take this advantage, please do take them so that they can also play back the video later after our live session and then able to capture all these counters that might be benefited and also able to give some trading opportunities. Okay, and if we look into the consumer product chart wise, okay, we can see that consumer product the index itself is pretty much on a range bound mode with a strong support at 560 area. Okay, with the weaker tone and also the softer market sentiment, we are seeing a certain degree of pullback in the consumer product. But that's why I said the sector itself is not overly all bullish, but we need to be really selective. Okay, yeah. So May, what are the counters that you think that has a good potentials?
Okay, I do list down some of the potential counter. You can look at the list. First one is the Dutch lady. If you notice, actually, Nestle they already released their results, and the earning is pretty good, underpinned by the stronger sales coupled with lower COVID-19 related expenses. But we do not forget that the rising of the raw material might impacts their profits as well. So the second one for the Lotus, we can see there is an improvement in the starch sales, but unfortunately for the flow business, right, it will be continue to be challenging because of the is under government pricing control mechanism. So for the third one, Mr. DIY, we can see the increasing in the numbers of store and a higher average basket size at 31 ringgit compared to 26 previously. So from there is actually able to offset by a lower GP margins. So for the most attractive, I mean, after Heineken announced their result, we can look at the Carlsbergs. Carlsbergs actually recorded higher sales for both Malaysia and Singapore from the reopenings of the brewery operations. So we believe the consumption's recovery and the entertainment outlets resuming operation, everything will benefit Carlsbergs. So the following will be SP Toto, previously known as Berjaya Toto. So we foresee the quarter result will be good as well because the lottery conducted 45 draws with full business resumptions as compared to 8 draws in the preceding quarters. So the Lucatric subprime jackpots amount, right, will also boosted their sales. So for the next one will be Genting Malaysia. I'm not sure if you guys notice Genting Singapore, they just announced their quarter result. So it's improving 70% their profit. So we see the leisures and the hospitalities business will, after resuming the operation, right, their business will be slowly getting better and recorded higher margins. Okay, but for Bonias and Padini, even though they are under retail segments, but because for last quarter is they recorded higher sales because of the mega sales, festive seasons like Christmas and everything. So for these coming quarters, despite the result will still be good, but might be slowly slowly lesser compared to last quarter lah, because of the lower seasons and everything. So, Elkie, can you comment on the technical parts for Casbert, SP Toto, and Genting Malaysia?
Sure, Mission. Okay. I think everyone must be got a little bit sad when we saw the SP Toto because it's reminded us about the I think it's 90 million jackpot that finally won by someone, some lucky fella. All right. Okay. But of course, if logically thinking, yeah, with the such a huge amount of sales and everyone is trying to hit that jackpot, we should see a stronger sales for SP Toto, and hence that could contribute to a potential better results on the coming quarterly result announcement. Okay, so if we look into some of the counters that have been highlighted, okay, like Carlsberg, okay, first thing is Heineken has reported a good result, okay, hence for its peers like Carlsberg, we should see pretty much a similar result on Carlsberg as well. And if we look into the technical view of Carlsberg, okay, this is one chart that I like it. And why is it so? Is because if we look into the chart, we can see that Carlsberg itself has been trading, okay, in a range bound between 1940 to 2260. Okay, this is the range that it has been trading, and then recently it has been testing the 2260 resistance level. Okay, so what we are seeing right here is this is a potential a very small triangle that trying to build on this, and we are seeing the momentum are squeezing for the breakout. So once we see the breakout of 2260, we should see a strong surge towards the very immediate resistance of 23, but eventually the swing wise we will be looking above 24, above 24 ringgit, okay, to 24.70 cents. Okay, and that is my view on Carlsberg, which is I think is pretty much positive. Okay, and for SP Toto wise, unfortunately, you can see SP Toto is still going on a downtrend. Meaning it was impacted by the MCO previously. Okay, so we have been seeing the share price on SP Toto has been going downwards. Okay, but fret not, we are seeing the SP Toto, the selling momentum has been slowed down with a bullish engulfing happening right here. So we can see the share price is forming although it's forming a lower low, but MACD is telling us it is forming a higher low happening right here. Hence, that is when the momentum start coming in, it telling us there is a potential of change in trend for SP Toto. And what do we need is we need it to break above the resistance of 2 ringgit right here for a change in trend. Okay, so for those who wish to trade on SP Toto, you need to be aware that if you trade, you're trading on the downtrend counters with a stop at the below at at this low, yeah. Okay, at 1 ringgit 78 cents area. Okay, and the next one will be the Genting Malaysia. Okay, Genting Malaysia is one of the hot stocks that everyone have been looking at it, and also so attracted to trade it because when we are moving into endemic, the economy recovery, Genting Malaysia is one of the hottest tourism spot that open, and also we are seeing the business recovery. For those anyone of you went to Genting during the Raya weekend, if you've been to the Genting during the Raya weekend, you can put one. Okay, I will salute you because it's really difficult to drive up to Genting all the way. Okay, I heard the other people's jam I like 3 hours. Okay, and the rooms all ran out. Okay, anyway, but if we look at Genting Malaysia charts, okay, it is more towards on a sideway ranging mood. Okay, one very simple way to look at it is we can see the 200 EMA is flat. It's still going on flat right over here, and we are not seeing a very strong movement on the Genting Malaysia. Given the bearish and also the softer market environment right now, the strategy that we can do for Genting Malaysia is we will look into somewhere near 2 ring 70 cents area, between 2 ring 70 cents and 2 ringgit 80 cents area for bullish rebound signals, buying support signal for us to execute and accumulate at the low near the support, and also holding it for the rebound to test above 3 ringgit again. So this is the range bound strategy that we can employ at this moment. Okay, and if we can also add in indicator like RSI to help us to identify whether if it is oversold and help us to accumulate at that point. Yeah. Okay, so if you want to know on how to use RSI, okay, you can play back our previous video. My colleague Zoe has shared with us some good information about how to use RSI previously. Okay, all right. Yep. So May, any other sectors that we should look into? Okay, any other sector that you think is attractive enough besides the consumer products?
Yes, so let's look at another potential sectors, which is oil and gas sectors. The catalyst includes the Brent oil price to stay elevated, oil supply disruptions, and normalize Petronas capex spendings. So we look into it one by one. So this is the Brent oil futures for the past 1 year. It's likely to stay elevated around $100 per barrel mark because of the inventions of Ukraine by Russia and subsequent sanctions on Russia has caused significant market uncertainty over the potentials of oil supply disruption. So as a result, the crude oil inventory levels are seeing a continued decline since mid of year 2020. So the situation worsens when OPEC's reluctance to reintroducing additional supplies into the markets. So besides that, uh, is expect Petronas capex to normalize spendings between 40 to 50 billions per annum going forward versus capex of 30 billion plus in 2020 and 2021 respectively. But we need to aware of the Biden administrations that announced that U.S. release of oil from the strategy petroleum. Can look at this news. U.S. release of oil from the strategy petroleum reserve of 1 million barrels per day starting from May for the next 6 months, as well as the downside risk from the full-scale lockdown in China, which could weaken the demands of oil and gas in the near terms. So you can see the average Brent oil price for first quarter of 2021 about $97 per barrel, which is much higher compared to third quarters and fourth quarters in 2021. So the higher Brent oil price could benefits the upstream oil and gas companies as well as the selective petrochemical company. Besides, we can also see there's a strong rally in the crack spreads. They might resulting better margin for refiners company. Crack spreads refer to the pricing difference between crude oils and the petroleum product refines. A positive crack spread tells us that the refined products are at a higher price than the oils, hence could indicate a better profit margins. We can see the crack spread hits all-time high as 2018, whereby Yuan and Petronas follow the rally as well. So, Alki, can you tell us more about the Yuan chart and the oil and gas index?
Yeah, sure. Okay. For the crack spread that you mentioned, I do agree that the crack spread is very essential in looking into the profit margin for the refinery. Okay, so refiners like Hengyuan, like Petron, and they would be benefited when the crack spread are higher, and especially at current environment where the crack spread at the record high. Okay, I think there is a very good chances. Okay, good probability that we will see a good profit margin that they're gonna report. Okay, and if we look back in year 2017, we are seeing the both Petron M and Hengyuan has formed a very good rally happening right over here with the spike in the crack spread as well. Okay, so similarly, when what we are seeing right here with this rally of the crack spread, okay, we might see a similar move on the Hengyuan and Petron M. Okay, it might not go as high as what it had in 2017, but the chances of it to trade higher will be there. Okay, if we look into the Hengyuan charts, okay, Hengyuan chart over here, we can see recently in between like end of May, it had rallied from 4.61 cents to above the highest today is above 7 ringgit. I think it's around 7.10 or 13 like that. Okay. However, however, if we look into the technical chart, what we are seeing today is a potential bearish candle with a long tail from 685 all the way to 7 ringgit 10 cents like that. Okay, and we had the selling down to close at some around 6 ringgit 60 cent. So with this candlestick pattern right over here, if we are seeing further selling pressure on the next day, which is tomorrow, we shall expect more selling pressure to come in and also pressure it to 6 ringgit or even a 6 ringgit 10 cents area or even break below 6 ringgit area. All right, okay, but given such a strong movement, such a strong rally since end of April from 4.60 cents until right now, I would say that this retracement is reasonable. It is a normal retracement that gonna happen. Because if we look into the technical point of view, we are seeing that is a huge gap between the 20 days moving average line and also the last price. It has to retrace and normalize the movement, okay, and it might touch and meet 20 days moving average, go sideways and then rebound from there. Hence, for those who are trading on swing and for those who had been wanting to go into Heng Yuan, what you can do right now is you can sit tight and look for the support on this retracement swing. Yeah. Okay. And you can use 20 days EMA as a support at this moment. Okay. So other counters that any other besides Heng Yuan, what other counters that we should look at for the oil and gas sector? Me.
Yeah, beside Yuan's, we can also look into Petronas Dagangang, the leadings of the oil and gas industry. Uh, because of the higher gross profit from its products like the mortgage, diesel, jet airlines, following the higher sales volumes. And beside that, for the petrochemical, PChems could announce better result as well because of the higher ASPs from their products, and it also insulates from the rising feedstock costs given its unique arrangement with Petronas. So beside Heng Yuan, the other refiners will be Petronas. Is expect to record better earnings as well because of the higher sales volumes and higher prices. So the other one will be Hibiscus. Hibiscus is they actually completed acquisitions of the oil and gas assets located offshore Malaysia and Vietnam from Repsol. So it's projected they able to increase their average daily oil and gas productions more than doubles. So yeah, that's the reason why for this month, right, it potential to record much more better earnings. And then the lastly will be MISC. The potential catalyst is from the higher recognitions of revenue from its conversions of FPSO projects and the others ongoing project in heavy engineering segments. So Elke, can you share us your technical views on PTEC, Petrons, and Hibiscus?
Yeah, sure. Okay, for Petronas dagangan, okay, I would say this is one of the it is a difficult counter for short-term traders to just scout in and out. Okay, we can see it's pretty the movement are pretty much overlapping and in conjunction. But one good thing that we can see on the Petronas dagangan is it is going on an uptrend channel. Okay, and we are seeing it is testing on the support of the channel. Hence, any for these stocks, I would think that if we are as anticipating a good result like what May was sharing, one thing that we can do is we can do it in a small position wise and accumulate when it comes near to the channel, okay, the channel support, okay, and try to ride on into this uptrend, okay, uptrend channel. As for Petron M, we can see the view on the Petron M are pretty much very, very similar to Heng Yuan. So what we can see is with today's selling, we shall see Heng Yuan and Petron M both gonna experience a certain degree of retracement or moving sideways for a short period of time before we can see a further rally. Okay, but the exceptional case is if tomorrow, okay, if tomorrow or a day or two, if we see a very strong bar or even a Marubozu cover the tails and break higher, then that is the turn of the story. Okay, all right. So for those who are interested in the refinery stocks, you do really want to watch out very closely how is the development for these few days. Okay, and another one like hibiscus. Okay, hibiscus, I think like what May was saying, that with a higher price and also it benefited from the higher price on the brand oil. So we with this current movement that we are seeing, we can see that the price are moving higher, going on an uptrend in the anticipation of a better results. Okay, but what we are seeing right over here is we are seeing that the buying momentum has been slow. Okay, buying momentum has been slow, with even though we have a higher breakout on hibiscus, we are seeing the 135 resistance is a little bit tough to clear and also stay higher. Okay, if we look at if we look at bigger chart, 135 cents is one of the key resistance area for hibiscus, and a break above and if 1.35 cents area is fully being cleared, the next resistance is somewhere around at 1.80 cents. So this is a major resistance for hibiscus. Okay, so we really need a strong move to clear this area in order we see a continual upward rally to 1 ringgit 80 cents. So for those who wish to trade on swing and right on the trend rather than being caught in this slow momentum kind of moods, okay, you might want to wait until it really clear and stay above 4.35 cents before you want to get a position. Okay, so what we are seeing right now with the slowing momentum, we might see hibiscus to ding dong around the area until the a news or a sudden decisive movement that drive it strongly above 455 cents in a day. Okay, and that could be the result. It could be some news or what. Yeah, but that is what we are expecting on hibiscus technically. Yep. Okay, so if we look into the next sector, okay, uh, the next sector that me the floor is yours, okay, to share with us about the plantations. What's your view about the plantation sector, me?
Yeah, thanks, Alki. So for the plantation sectors, the catalyst includes a higher CPO price due to the Indonesia government's export bans on cooking oils, raw materials, and shortage of sunflower and rapeseed oil. Um, and Malaysia also proposed cutting the export tax on palm oil yesterday. So Indonesia export bans effective from 20th of April in order to further improve the cooking oil supply situation in Indonesia expects to benefit our local upstream plantation players. And additionally, the global shortage of cooking oil because of the conflict between Russia and Ukraine, which accounts for nearly 75% of the global export for sunflowers and rapeseed oils, will make the European Unions to relook at Malaysia and Indonesia for more sustainable palm oil. So Indonesia's contributed about 56% of global palm oil exports, followed by Malaysia's about 33%, the second largest palm oil exported country. So when Indonesia restricted the export of palm oil, we Malaysians able to expand our footage as we're able to export more palm oils globally. So this is the news about export tax deductions from 8% to 4 to 6% to help fill a global edible oil shortage and grow the market share of the world's second largest palm oil producer. So as you can see, uh, for the palm oil price for the first quarters, in average is higher than the second half of 2021, which will translate into better earning prospects. However, the major concern for plantation sectors are the shortage of harvesters, the impacts from the rise of minimum wage, and weaker competing oil price to soybeans. Okay, so these are some of the ideas for labor shortage percentage among the plantations companies like SOP, TANs, FGVs facing bigger difficulties in labor shortage. And this is about the minimum wage of 1,500 effective from 1st of May, which might increase the cost for plantations companies. So in conclusions, the average FCPO price for first quarters in 2022 is about 6,000 plus per tons, which is higher compared to the third and the fourth quarters in 2021. So besides that, we should avoid those plantation companies who have significant exposures of palm oil assets in Indonesia. as they might not able to reap the benefits from surging of palm oil price. So to look for the plantation and so therefore we should look for the plantation players with lesser reductions in QOQ productions. So Elkie, can you comment on the plantation sectors index, please?
Okay. Yeah. Okay. For the plantation sector, okay. For the plantation sector, if we look into the plantation index, what we are seeing is, for the plantation index, we are seeing a bearish and bearish divergence on the plantation index here. Okay. Sorry. Okay. Sorry, that's a little bit technical issue. Okay. All right. Okay. For the plantation index, what we are seeing right over here is bearish divergence happening on the plantation index, and I believe many of you guys that have been trading on the plantation counters, what we are seeing right over here is what over happening over here on the plantation index is, recently we are seeing more selling on the plantation counters despite the recent higher breakout. Okay, and why is it so that on the plantation happening on the plantation index is we can see the plantation counters has been moving higher, much higher since early this year. And if we look back into previous time, last time CPO has been only trading at 1,800 to 2,000 metric tons, and right now the highest that we can see recently is 7,200. Okay, it has been on a rally for a long time, and analysts also expecting that we're gonna experience a little bit more productions coming in, more supply coming in coming months. Okay, due to the seasonality. Okay, hence we are seeing a bit more conservative on trading and also buying into plantation counters. So if we look into the index wise, it is going on a on a slowing momentum. It remains on upward trend, but in a slowing momentum kind of movement. Okay, so some of the plantation counters to watch that May would share us. Yeah,
Yeah, we
May.
can.
Okay.
Okay,
Yep.
so for plantation sectors, you can see for TSH, NSOP, and SAB, despite they are having less reductions in productions, but they are having exposures to Indonesia estates. So besides that, our big palm oil players like Samdabi, KLK, Genting plantations also exposed to the Indonesia's plantations businesses. So uh, if we exclude all of these, the ideal one will be the HS plants and the ENO with lesser reductions in productions and without having the estates in Indonesia. So HS plant and ENO will be some of the potential counters that we can look at. And then besides that, there is also a list of counters that are already listed out for 20% drops productions and 30% uh, for those plantation counters that you guys can have a look lah. So Alki, can you share with us the technical views on HS plant and ENO, please?
Yeah, sure. Okay, so for the HS1, we can see that there is a bearish engulfing signal over here on the HS plan. We can see this is the higher high and also a lower high happening on the MECD. Okay, it's telling us the buying sentiment has been slowing down, but it doesn't tell us that definitely it will go all the way down. Yeah. Okay, it's just telling us that the buying sentiment has slowed down, and at this moment right over here, it might go sideways or it's just trading in the range. It could be around 3 ringgit to 3 ringgit 30 cents range at this moment. Okay, so what we need to do for those who are interested in HS Plant is you might want to look for it to find a footing. Okay, it could be at 3 ringgit or come to 2 ringgit 86 cents support level that indicated right over here. And if it's supported and start to show some bullish signal over here, then that could be a good area to enter. Okay, ahead of the result that we are anticipating has a better probability of having a better result. Okay, yeah, because for plantation companies, we know that year on year wise, the result is very good chances to be great. Okay, but we also have to take into consideration of the potential decrease in the production, like what May was sharing. Okay, hence we really want to be careful in picking the correct plantation stocks. Okay, and another price that May was sharing, we can see is really they looks the same because um the movement, the rally is happening to the whole sector. Okay, but when it comes to the earnings season, then we have to be really to choose which is the one that have a better potentials to either tank it, not dropping while others dropping on the sector decline, or it has a better chance of bounce higher or rally higher compared to others when the buying happening. Okay, so for price points, we can see during this bearish divergence, what we are seeing is 1 ringgit 65 cents is a very concrete support that we are seeing for price. And with this selling down, we are seeing the good chances that it might come to test the 1 ringgit 65 support over here. Okay, similarly, if we are seeing some signal like this hammer, okay, like hammer, like bullish engulfing happening right over here, then it might be a good chance to accumulate some of the positions with a stop loss below 1 ringgit 65 cents right over here. Okay, yep. So yeah, May, uh pass back to you. Okay, to share with
Okay.
us on the next sector.
Okay, so lastly, let's look at those technology sectors. The catalyst includes the potentials of EV developments and the trade diversions between China and US, as well as the semiconductors demand remains intact. So, the European Union has unveiled its blueprints under the European Green Deals last year to stop the sales of petrol and diesel cars by 2035, which expect to drive the electric vehicles development, which is tallies to the leading EV makers Tesla financial performance, as you can see from here. Their earnings is improving throughout the years. So the trade diversions between the US and China also expect to benefit our local technology company in Malaysia. Is supported by the announcement by Intel's 30 billion cent Infineon's 9.5 billion ringgit expansion investments in Penang and Kedah respectively. So yesterday, there is another news about US-based global material suppliers, Indian Group, to invest 250 million ringgit in Penang. Um, and then the semiconductors demands remains intact. So based on the World Semiconductor Trade Statistic, the global semiconductor industry sales were $52.5 billion in the month of February 2022, about 26% increase year over year. So the semiconductors revenue increased over the years, especially for the past 5 years. So that's why the demands expect to remain strong due to the adoptions of 5G networks, infrastructures, and device we had electrifications and autonomous driving, increasing application of IoTs and essentials. However, we must also not forget the heart of to Ukraine's neon gas productions may pose a challenge to chips manufacturing if the war persists, as the Ukraine and Russia are largest semiconductor um, grade neons and polonium suppliers, whereby neon gas is one of the essential raw material during chips productions. And then the aggressive interest rate high environment in US could dampen technology companies which poses higher PE generally. The other challenges includes like China lockdowns, the manpower limitations, supply chain disruption, rising inflations, and so forth. So, in conclusions, consumer okay, these are the news about the Ukraine's and shortage of neon gas. Okay, so in conclusions, we are neutrals on the consumer electronics as we see a slowdown in mobiles and tablets markets due to the restrictions in traveling and citywide lockdowns in the major city in China. But we remain bullish on semiconductors for um, data center 5G base stations, and they're still seeing a healthy demand as expansions need to continue to support the 5G consumer device, as well as we are positive on the automotive semiconductors from elevated demand with the proliferations of electric vehicles. So, okay, Haki, can you share with us on the technology index view?
Yeah, sure, May. Okay, why not? Okay, although we can see the results and the outlook for technology remains quite robust. Okay, however, when it comes to the technical charts, if you look into the technology index, we can see technology index is going on a major retracement. Okay, especially it is retracing on the trend, the upward rally trend that started is since the pandemic, okay, in 2020. All right, this is a very major move and rally for technology, and hence we are seeing a similar huge retracement swing as well for the technology sector. Okay, at this point, as of today, we are seeing it is testing again the previous low at 63. Okay, for technology index. Okay, so if we look into some of the major key tech stocks, we should see a very similar signal whereby they are testing the previous low. Okay, so if you ask me, hey, Elki, whether this low will be overtaken or not, the answer is I don't know. Okay, I seriously don't know. Okay, it can bounce from here, it can break, but I do not know for sure. But what we can know is this is a downtrend, and if it breaks lower, we should see a further selling down. And at this moment of time, we do not see a slowing in the selling momentum yet. We can see the selling is still very steep happening right over here. Hence, if it break below, we should see a further. There's still some space for the further selling down. Okay, so for those who are interested to buy to buy technology counters for long term, or you think it is a bargain to buy, you might want to wait a little bit. Okay, or you can buy in a small position, just in case it this is the low, this is the great support, and then we see the rebound tomorrow. Okay, and of course we will take the guide from what's happening in the next stack today as well. Okay, but before you going into before doing that, we definitely need to pick some one or two and know which are the counters to buy, right? Okay, then May, can you share with us what are the counters that we should look into if we really want to pick some of the tech counters?
Yeah, so for text counters, first we can look at the DNO. Is the its growth will be tally uh, with the growth. I mean the growth in the LED component sales to the automotive customers. Amid the strong global demands from its LED products. And then the second one will be the MPI. We can see there is their strong revenue contributors from its automotive segments and the industrial segments, which is more than around 60 to 70% of these revenues. And however, we might see for Inari, the revenue might be slower down because of the China lockdowns, and their sales will be slowing down from the mobiles and the tablets, everything. So for Kobe, we can see there's a high demand from the semiconductors E&E industry, and the newly acquired pharmaceutical and healthcare products might also improve their earnings. So the other ones will be same, SAM same. The revenue might increase from its aerospace segments, and as well as the equipment segments due to the improved global semiconductor equipment and the economy recovery, and the increase improve in the air passengers travels. So yeah, okay, can you share with us the technical view on DNO, MPI, and SAM?
Yeah, of course. Okay, if we look into DNO, we can see the DNO technical chart is really similar to what we are seeing on the technology index just now. Okay, it is also forming a topish formation right now, especially after it breaks the 4 ringgit support area. It has been again, it right now is trading below the 4 ringgit and testing the previous low 3 ringgit 35 cents area. Okay, with this break, we will see there are quite a number of a good space for it to trade lower to as the next support at 2 ringgit 50 cents. Okay, yeah. So for DNO wise, right now it's testing the low, and we should see if this low able to provide some supports or not. Okay. So for those who are trading on RSI, you might want to check if it is oversold, and based on the movement like here, I think it is oversold on RSI. Okay, unfortunately, I do not include RSI right over here. Okay, but I think it's oversold, and if we see a strong rebound, then that could be a buy signal with the stop at the low of 3 ringgit 35 cents. Yep. Uh, for MPI wise, what we are seeing on MPI is the selling pressure on MPI has been slowing down over here uh, as it getting below 30 ringgit, and also the previous low is somewhere around 26.50 area. Okay, so what I'm expecting is unless we see a very critical or major catalyst happening on the Nasdaq or across the global technology counters. Otherwise, we should see 26 ringgit 50 cents to be supported for MPI. Okay, it should test and it might be supported given the selling momentum has been slowing down as what we are seeing right here for MPI. Okay. Yeah. So for SAM wise, we can see very similar on the SAM is testing on the support as well. Okay, but one thing that is different from DNO is the selling pressure for SAM is pretty much well distributed and also happen in a longer time span of time. So this is telling me that the selling momentum of SAM is not as strong as DNO. So despite that, I'm looking at the know my break lower. I'm a little bit more positive with Sam, and it might support at this support and then go sideways over here. Okay, so for Sam wise, the chances of it being supported at this area will be greater compared to DNO. So in between these three, I will be more positive on MPI and also Seng based on the technical reading. Okay, yep. So if we wrap up the whole section, we can see that May has been sharing with us with consumer products with counters like Cosworth, SP Toto, Genting Malaysia, okay, and oil and gas we have Petronas, Yuan, Petron M, Hibiscus. Plantation wise we have HS Plant, Enterprise, uh, technology wise will be BNO, MPI, and SAM. Okay, yeah. So hopefully this the sharing today will able to help you guys to have a better idea of some of the happening in across some of these sectors that we think could be um, posting some good results and also give some of you right here an opportunity to trade it and make during this period of time. Okay, yeah. So so to answer some of the questions, okay, let me Mr. Ang, okay, let me take some questions, okay, because the time is running, so we just gonna take one or two questions, okay. Mr. Ang is asking about eh, okay, I think this question is really interesting. He asks is, has the good results been priced in the chart technically, just like glove with the ASP trend down? Okay. Yeah, this is a question whereby many of us might ignore. Okay. So, many times in current markets, while we are doing all this analysis, there are other traders and also market analysts that they are doing it and they are positioning ahead. So, ahead of the result, if we are expecting the result to be good and the rally has been coming in earlier before the results, then that then when the result announced, we might see buy before the result and sell on the fact kind of impact. Where when the result is out, then there's no more catalyst that to hold this price to go higher. Hence, there might be some profit taking coming in. Okay, because they have been anticipating the good result. They waited for it, and when the result is come, that's the time for them to take profit. So if you are if after today's session, if you think some of the information that we share, you buy it and you think that these are some of the information that you would like to help you to make a decision in trading, okay, and you decided to buy that counters, you might want to look into technical to set up your trading plan, to set up where to buy rather than wait until the result to come out and then only buy it, okay, because like just now what we said, if it really ahead of the result announcement, then there even the result is good, we might see some profit taking and also some selling rather than continue to go higher. Yeah, okay. Unless the result is unexpectedly good, then we might see a much stronger further up move on the counter. Okay, so yes, that will be the reason why sometimes the good results are delivered, but the counters are selling down actually. Okay, yeah. So okay, another one will be on Magnum. Okay, let me share my charts. Okay, let's look into Magnum charts. Okay, if you look into Magnum chart, we can see it's very obvious that Magnum is also trading on a downtrend. But what we are seeing right over here, the selling momentum on the Magnum on this swing has been slowing down, but still going on a downtrend and with a strong support at 1 ringgit 70 cents area. Okay, yeah. So despite like SP Toto, okay, which recently has been really hotly discussed. Okay, Magnum, the sales might remain positive. Okay, but technically we can see that the trend is still going on a downtrend. So that's why, like, even though we are anticipating good sales on SP Toto, when we trade SP Toto, we still have to do it very carefully. Okay, until we see a switch in the trend or buy it and with the previous low as the stop. Okay, so for Magnum wise, if you think that you are buying for its dividends and you think this is you want to buy for the support, this is an area that which technically it is the support that we can see. Okay, you can buy and then hope that when the SP Toto release a good result, it might be lifted and also trading higher along with the movement in SP Toto. Yep. Okay. So another one will be UWC by one. Okay. For UWC is a technology counter, so we can see the outlook are pretty much the same with other technology counters, the technology index as well. Just that UWC has broke below the key support of 3 ringgit. Okay, so with the break of support of 3 ringgit, we might see further selling down on UWC, and at this moment, similarly like DNO, we can see that the selling on the UWC remains strong at this moment. Okay, uh, so the momentum remains strong, and we might see further selling down to 2 ringgit 65 cents or even lower if the environment remains very weak at this point for UWC. Okay, and last we're gonna look into Hexta Industry. Okay, next will be on the Hexta Industry. Hexta Industry. Okay, Hexta Industry. We can say Hexta Industry has been making a good move from 60 cents to 40 cents. Okay, one of the catalysts for Hexta Industry will be on the fertilizer. Okay, on its venture into fertilizer, and due to the Ukraine-Russia war, fertilizer price has been soaring high and also has been remain at the high price level. Okay, and that actually creates some of the trading interest into some of these uh, fertilizer related companies like Hexstar, like Encom, Nilex. Yep. Okay, but for Hexstar Industry, they are just in this fertilizer business, and how much the impact it will show. How much will it impact and affect the quarterly earnings? This one is still remain unknown. Okay, but overall the sentiment remains positive on Hexstar Industry and Hexstar Industry and also Hexstar Global. All this due to the high fertilizer price. So if we look into technical side wise, we are seeing a more selling pressure, okay, happening after recent rally. Okay, the buying momentum also has been slowing down a bit, so it might trade back to somewhere around 30 cents, 31 cents area to find the support before we can see a further rally for Hexstar Industry. Yeah. Okay. Yep. So last questions. Okay, last questions that related one will be by James. Okay, James is asking what is mean by the blue highlighted counter in the table. Okay, the blue highlighted counters in each sector are the counters that we think it has a better potentials, okay, compared to other counters in the same sector as well. Okay, so those are the counters that we will be highly focusing on. Okay, yep. So that's also the reason why we have been going through some of these blue highlighted counters, their technical chart, and share the view, the technical reading with you guys. So hopefully today's sections is fruitful for you guys. May, do you have anything that you wish to add on?
I think that's all from my side. Yeah, thank you, everyone.
All right. Okay. Thank you everyone for joining our session today. I hope it has been a fruitful night and also provide some of the insights for you guys to make a better decision in handling the quarterly earnings unfolding this end of this month. Okay. Hopefully you find your goal and make the profits from the market. Thank you very much, everyone, and have a good night. Bye bye.